Welcome to today's Stock Play of the Day Overtime Edition. This Monday on the Stock Play of the Day, we talked about gold. The symbol was GLD. That's the ETF that tracks the gold prices. We'll discuss, did we score or did we fumble? Hello, my name is Brian Overby, and I am the Senior Options Analyst with Ally Invest. Now, this week on Monday Stock Play of the Day, we talked about GLD. That's the ETF that tracks gold prices. It was a very simple trade that we looked at, just buying a long call in gold, going out a little further in time. But I'd like to take a moment to go back to a couple of weeks ago when we talked about the XBI. That is the ETF that tracks the biotech industries. We see the strategy inside the Ally Invest Options playbook on my screen right now. That strategy was a back spread with calls. It's a little bit advanced for our stock play of the day, but we had a complex outlook when we were discussing this underlying stock. And we just talked about how we might get either a big move to the upside or a big move to the downside. The XBI was a little frothy and we didn't quite know which way it might go, but we were expecting a big move. So with a back spread with calls, what we were hoping is that we're going to be long one more call option than we are short inside the back spread. That means to the upside, we have substantial upside potential because we have one more call long than we are short. But that short call helped us pay for that extra call. So if the market went down, we were still bringing in a net credit to the account, which meant that if we got the big move to the downside, we have a way out. We have a hedge on our position. So we had a very interesting movement in the XBI over the last 2 weeks. That trade would still be live at this point in time. So since we had such a simple trade this week in the GLD, I thought I would take the time to actually look at where our back spread is in the biotech ETF. All right, so XBI as of today, and we're once again taping on a Thursday this week for the stock play of the day overtime, is trading at 1112.42. It's up $2 on the day. So on the open, it was actually down a little bit more, which in this case would actually be at a better scenario for us. At this point in time in the trade, we would like the market to continue on down because if it bounces back a little bit from the move down, then we're in danger of being in this little valley of death that's inside our back spread with calls. So overall, let's look at the trade. Here's what we did. We looked out at the August 7th expiration. There's only 8 days remaining. And if we look at this trade right now, we see that when we did the trade could be done for a net credit of 80 cents to the account. The market has gone down and it went below our 113 strike, which to the downside, that's our ideal situation. With the stock being up a little bit today, it actually hurts the position, the stock being up 2 points, but it's still below 113. So if we look at that, we are down on the position overall. And once again, it's not meant to be a recommendation. We're just trying to learn here on the stock play of the day overtime, if you will, at this point. And it's trading for $1.70. That means you're down approximately $1 on that trade. So the one thing I wanted to highlight, though, is that here is the profit and loss graph if we put the trade on today, and it shows you exactly where we're at. This is where the underlying stock is. If the market continues on down, which it was a little bit today, on the downside, that's good news because we get to capture that 80 cents that we would have put the trade on in theory a couple of weeks ago. So we really needed to stay below 113. But at this point in time, you're a little bit nervous because if the market starts coming back, this is the valley of death that I was talking about. And if it does come in this range, we definitely want to get out of the trade. So what's the moral to the story here on the XBI back spread is you might want to consider actually closing it, at least closing it by Monday if the stock just kind of hangs around this range, because what you really don't want to happen is that underlying stock to start creeping up towards our long strike in this position, the 120 strike. So if it creeps a little bit down today, where it started down that 2 points, well, heck, we're feeling pretty good about the trade overall. But if the market does start creeping back up, we've got to be really worried about it landing somewhere in this 120 area. And as we talked about on the actual stock play of the day, where we looked at XBI, we said that if we get into the final week, we just want to get out of the trade. So we had a forecast on price and we had a forecast also on timing. So now let's jump into today's stock play of the day overtime stock, which was taped on Monday. We tape every noon on Monday Eastern time on the Ally YouTube channel. And we see that this is a chart, a 5-day chart in GLD. And here is the day that we talked about the GLD trade. So it was noon time. That's when we start Eastern time. And then this was the rest of the trading day. So once we put the trade on, not much happened overall. And then the next day, we actually did get a little bit of a breakout in gold that we're kind of hoping for. We talked a little bit about the cup and handle strategy and our cup and handle chart pattern for the weekly, a big cup and handle pattern that I was looking at. And then the stock was pretty volatile overall. We had a big run up to 186, came back down to 183. So since we put the trade on, in general, the trade is doing okay. But once again, not meant to be a recommendation. We just want to follow this trade. It was buying a long-term option contract to get us all the way out till October. And it's more of just an easy way to own GLD without all the cost by buying a longer term in the money option contract as a substitute for owning the stock. So it was a little bit higher delta trade. When we put the trade on, so here is where gold is at right now, GLD, I should say, is at right now. It's 183.49. It's down $1.64 on the day, almost 1%. We went out to the October 16th expiration. We got 78 days remaining, so we still have a lot of time. And we bought the 68 strike call. The delta was around 80. Now it's at 83. Why? Because the market has gone up a little bit. When we purchased that option contract on Monday's show, in theory, when we put the paper trade on, it was trading at $16.15. We now see it at $17.25, up about 7% since Monday. So overall, the trade is going in the right direction. We'd probably just stay the course, and we'll look at it a little bit later on another edition of the Stock Play of the Day Overtime. So that's going to be it for today's show. Don't forget to click subscribe and ring the bell. We will be back this Monday for the Stock Play of the Day at noon Eastern time on the Ally Invest YouTube channel.